Okay, good morning to all. So we are starting this session. So my name is Nicolas Retzenthaler. I'm from the European Commission in Brussels, and I work on the Sustainable Energy Unit and in the International Partnership Directorate General in Brussels. So in the previous session yesterday, we have seen the importance of having the public and the private sector working together to reach full electricity access by 2030. You have many instruments that have been developed to reach these partnerships, and also new ways of working that have been developed recently. In this session, we are going to approach things from a different angle. That is to say, we are going to see what are the business opportunities that this new way of working and this new instrument represent for decentralized renewable energy companies in emerging markets. For this, we have a broad panel of participants today. Well, we have public and private investors, we have private companies operating in the sector, we have international funding partners, we have also intergovernmental agencies, with all sharing the same goal of boosting clean energy access globally. They will share their experience to us, and I will myself introduce what the EU is doing in the sector, and then after there will be an opportunity for questions to the panelists, and we'll try to be as clear and concise as possible. So I will start with some figure first. As this was said already yesterday, the number of people without access has dropped dramatically from 1.2 billion people in 2010 to 700 million, a bit more in 2020. But with most of them in sub-Saharan Africa, about 568 million people. But the number, the pace of progress is slowing. It's slowing, as we can see on the graph. And one of the reasons is that population in the remote areas are more and more difficult to reach. And that's also one of the topics that we'll address today. So meeting the SDG 7 will also mean to find ways to access to these people and to develop rural electrification. Decentralized solutions are the least costly way to provide power to half of these people. One of the major problems is the financing, as we all know, that need to be increased from 20 billion per year to between 30–40 billion a year, leveraging both public and private funds. So I will present now what here we can see also what is needed in terms of efforts in the on-grid and the off-grid sectors. So what the EU is doing now, we have this new strategy that has been launched in December last year, Global Gateway, which is a Team Europe response of 300 billion euros that will be invested in infrastructure in 5 sectors, including energy. There is also other sectors like digital, education, health, but energy will be one of the main sector. And to address the needs of Africa, of sub-Saharan Africa, there will be within this package of 300 billion euros a dedicated investment package for Africa of at least 150 billion euros. And within this package, there will be a flagship project, as you name it, that is also bringing all European member states institutions, IFIs also from the EU, to develop what is called the AIG, the Africa EU Green Energy Initiative. which will be the main strategy, the main instrument of the EU and member states, so Team Europe, to support the energy sector in Africa between 21 and 27. So now, given this €200 billion, there will be a team a new instrument that has been developed, the European Fund for Sustainable Development, plus this program that has been expanded in its geographical scope and its funding, that will blend the budget, so mixing EU grants with funds from financials. And the new instrument that will also be presented today is the guarantees that will also support de-risking operations. And within the guarantee, we have two types of guarantees. One is for the public sector, so covering sovereign risk, that will be completely, exclusively implemented by the European Investment Bank. And we have another part of the guarantees that is called open architecture, that will gather all European IFIs for private operations. And of course, all this will be supported thanks to technical assistance to promote enabling environment. So here in this panel, we have representative of some of these aspects. So one of which is an example of a Team Europe initiative that is implemented by GetPro. So we'll know more. Sebastian will tell us more about this. So that's also the guarantees and the blending, what I was mentioning earlier. We have financial instruments, so blending instruments that are also already existing. So we'll have an example, Jean-Denis will present the example of Electrify as one of the blending instruments that is already existing. And in the guarantees, we have a set of guarantees that have been put in place in the we have a set of guarantees that have been put in place in the here that have been put in place in the energy sector, among which one that is very interesting for the mini grids and for rural electrification is the one of Cofidis, the second one that is already up and running. So now I will give the floor to the first panelist, Sebastian from GetPro, that will introduce what GetPro is doing in the sector as an example of a Team Europe initiative. Thank you.
Does this work? Yes, great. I need my slides, please. Do I? Yes, thank you very much. Thanks a lot. Yeah, I will talk about GetInvest, which is indeed part of GetPro, a European sort of Team Europe program. But first of all, yeah, welcome, and also thanks for that introduction. And I have to say, when I was invited for this panel, I was wondering a little bit, because it's about funding opportunities, and I need to tell you that actually we don't have money. Yeah. I mean, we are a TA provider, so we don't have the money. But I think the spoiler here for you and for the projects out there is, of course, that we do follow the money, and even more so, we know how to get the money. Yeah. That's sort of in a nutshell what GetInvest is doing, but I give you a bit more of a background on this. Yeah. So putting this knowledge about funding to work in the program GetInvest, we have, in a nutshell, developed a machine, as we sometimes call it, which supports the programs and the companies in accessing financing, and also in developing a pipeline of investment-ready projects. Let me see if this works here now. Yes, this is GetInvest in a nutshell. We are, as you said, a Team Europe, approach. We are the Team Europe one-stop shop. I'll come to that a bit later for green energy investments. And what we're doing, we support all relevant delivery models, on-grid, off-grid. We also engage now in mobility, hydrogen, everything which is sustainable, renewable energy. And we do build on a broad network of financiers and partners which we are working with. We are active in Sub-Saharan Africa and also Caribbean and Pacific. And we are implemented as a program by GIZ. And we are, of course, very grateful and thankful to our contributors, which are the European Union and also Germany, Sweden, the Netherlands, and Austria. The scope of services in Get Invest, which we provide, very much follows the typical business development phase for a project developer or a business engaging in renewable energy. And I think this is hopefully also part of the audience here, because we really want to attract you also to our services. And we really follow the typical phase. We start with sort of the scouting, for scouting activities for new markets and countries. We provide information. We also support projects and companies on developing the ideas. We do matchmaking events like this one here, demand stimulation. We do capacity development also in the financial sector, which we could talk about in a separate session, quite interesting new approach. And we support the associations on the ground, which are also helping to develop the market for renewable energy solutions. And then sort of the last step towards financing your project is obviously the project preparation and advisory service which we're providing. And since we talk about finance here and access to finance, I'm going to focus on this in the next slides. Our main service here and the heart of our activities is the Finance Catalyst advisory service. The Finance Catalyst exists since more than 5 years now, and it is by now the leading and most flexible TA facility providing on-demand advisory to projects and businesses which are involved in looking for finance in renewable energy. If you look at what we call the funnel, you can see that we had received over the last 5 years more than 1,000 applications. And then sort of we take them through the vetting and the different assessments and then the support processes. It's all free of charge. And we are proud that we have by now actually brought 51 projects, companies towards financial close, which is the equivalent of €500 million of investment value. We do this with a large team of experts, external advisors, more than 25 of them. Some of them are also here. You can meet them during the matchmaking sessions. And these advisors are really sort of going into your project, into your businesses, and they really understand what your needs are and support you on the different aspects. This is not Get Invest, but also nice. Okay, there we go. I keep it short. This is a heat map of financiers we work with, and I think the main message here is that, as I said, we follow the money and we know how to get the money because we know, I would say, all the financiers out there in the market. We do have a very deep database internally, which is also partly accessible online on our website, where we can exactly link projects and companies in their needs to finance to the respective financiers. We know the ones here on the panel, but also many others. And we also do this in a very transparent way because we are building, of course, on network, on knowledge, but we're also building on our internal process, a scorecard, which makes sure, based on our data, that we're really finding the best finance solution available out there in the market. And we also support when it comes to structuring and putting together also more complex finance deals, especially for larger projects. The levels of support in the Finance Catalyst, which is, as I said, our key service here, it really depends. Once you apply for support on the website, we check the eligibility, and then we actually put the team of advisors together. And this slide here, I'm not going into detail, it's just a brief example of the different kind of focuses we can have. And we do have the advisors which are then ready to support you on these topics. So we first find out what you need, and then we put together a team of advisors together, and they support you on this. It can take between a couple of weeks, just over the last mile, to find a financier. We've seen this, but it can also take 2 to 3 years of support with intermittent sort of getting back and also waiting for documents and so on. So we are very flexible on this. One example I had to bring before I come to the last slide. I could bring much more. You will find all these stories and also success stories on our website. This is a nice story which also shows a little bit of the typical project we work with. Simo Solar here in Tanzania. It's off-grid energy, productive use in the fishery sector. So it's solar pumping, but it's also sort of nighttime fishing, lighting. Here we managed to mobilize 3.5 million of investment in Simo Solar. And in order to get there, we actually provided quite a bit of advice on the business plan, on their business strategy, on their financial structuring, and so on. So as I said, have a look at the website. There's much more of these stories from Tanzania and also from other countries. And the last slide, just to mention this again, we are a European program. We are very proud of this, and we are also even more proud of this that we have been recently announced the Team Europe one-stop shop for green energy investments, which means that we are sort of the main to-go-to institution for accessing finance of European instruments. So I leave it with this. Check our website, and you'll find much more information there.
Thank you, Sebastian. So, you presented an example of a finance catalyst. The one-stop shop also is something that is very innovative. So it's a very good entry point if you have questions about how to access finance, what are the new instruments that are in place. And that's what, you can contact Sebastian. You can also go on the website and ask GetInvest how to access this funding. So now we'll have another, we'll approach the topic from another angle. So we'll have Denis Onyango, who is an investment manager at Triple Jump, that will present his experience and share with us his knowledge or views on the topic. Please.
Good morning. Yeah, my name is Denis Onyango. I represent a fund that was recently formulated called the Energy Entrepreneurs Ghost Fund. It was seeded by both Shell Foundation and FMO in the year 2019. And the first pool of capital was about $45 million. And the intention was to, of course, close at around $120 million. So typically with funds, you take about 2 to 3 years to close the fundraise. So we've currently raised about $58 million, and we're targeting to close $120 million by end of 2022. The core reason why our fund was formulated was that for the past decade, most of the funding has either been provided from a grant angle or even to provide venture support. But that has been great in, of course, seeding new ventures that are trying to bridge the access to funding. But what we've noticed is that as the years were going by, most of the companies that actually had succeeded in growing were actually now attracting commercial funding. And hence, there was a key gap in the missing. So you can probably even call our fund a missing middle fund, because in essence, a lot of funding was either at the very extreme, at the two extreme ends, so to speak, and none was really figuring the equation for the middle ventures. So hence the reason why we were founded, to provide that bridge financing. So we typically provide capital across the entire capital structure, from debt, equity, and also what we consider to be mezzanine financing. And in fact, mezzanine financing is our key go-to instrument. We tend to provide capital across the board, from companies providing energy as a service, and here we are speaking about the NI companies and the mini-grid companies. So we provide them financing for them to be able to bridge the upfront cost that it takes for them to be able to either set up their mini-grids or be able to provide alternative support to their main grid. In this case, I mean commercial and industrial companies. We also provide financing for companies that are distributing pay-go products, and those are distributing these products through either a rent-to-own model. So that is, of course, a key product for us, because, as we know, most of the rural households are, of course, not experiencing energy at the right clip. And we know that at this particular moment in time, one of the most feasible way for them to access energy is, of course, through these products. And then lastly, I think for the very frontier markets, we have the solar lanterns, which tend to be either less costly or also tend to be easier to distribute. So that still is within our mandate. But speaking about the kind of capital that is currently coming to the market, as I mentioned earlier, there's been a significant uptick in debt financing. As you can see from that graph, as at 2020, that capital was predominantly the go-to instrument for financiers. And of course, for obvious reasons, it's the most secure, it's the most liquid, and it's the easiest to exit. And hence the reason when we were founding our fund, we felt that there should be an alternative. Hence the reason why we've come up with an interesting instrument called the mezzanine type financing instrument that tries to bridge the gap between the companies that are in the tail end of the but of their lifestyle growth cycle curve, vis-a-vis companies that are also on their upper end. So when you look at the graph, what you're practically saying is that as companies begin to grow, we tend to find that they get a lot of equity type financing because they are low in terms of their cash flow production. And as they, of course, grow, they tend to attract debt type capital. But in the meantime, between when they are poised to grow, there is this critical need whereby the companies are accelerating their production. They have key operational needs. They have to improve their capital expenditures. And we tend to find that at that particular moment in time, their balance sheets cannot truly support debt, and equity investors who had invested earlier tend to shy away. So that's the particular reason why we feel that our mezzanine type financing, which simply means we either provide convertible debt, which has both equity and debt-like features, or we provide an instrument called a mezzanine debt, which is mostly attuned to equity, but also can have liquidity angles. Then that particular capital can be able to ensure that the companies continue to grow to an extent whereby then they can be more attractive for debt capital in the later years. I think if you look at a competitive map, we are literally at the space whereby we'll help you bridge the validation gap and help you go towards what we consider the product gap, where you are now looking at going to a new market. You're either looking at expanding your products. If you are selling solar lanterns, for instance, or other solar lanterns, for instance, you might want to sell solar home systems. If you are selling solar home system, maybe you might want to add irrigation products. So we feel that this is a need that is critical in the market. And in any case, if there are companies that are in dire demand of that particular funding, I think we guys might be best suited to address that. So in terms of how we carry our investment strategy, we have both an instrument and a business model approach. With regards to an instrument, we look at 4 key instruments across the entire capital structure, as I mentioned. And of course, mezzanine is the go-to instrument, but we also provide equity, long-term debt, and what we consider product gaps, which are, let's say, a company that requires to raise an SPV type of structure. That's where we can also become competitive. From a business model perspective, most of our funding is going to be targeted towards pay-go businesses and rent-to-own type businesses. Of course, we have an allocation for energy as a service companies, but also we feel that we can be able to catalyze the ecosystem through investing in enablers. And by enablers, we talk about companies that can either bridge the technology gaps in these entities, or companies can bridge business process gaps. I think by this we mentioned the likes of the Solarises, the Angazas in the market, or even some guys who are offering bespoke financial tools that can help, especially in terms of accounting and reporting across the energy access value chain. I think the last slide here is basically meant to say that, of course, experience has shown that investing in frontier markets is quite unique in the sense that you can't only provide capital support. So we tend also to provide beyond capital support, and we do this in 3 phases. There is the core operational support that we provide. Then, of course, ESG requirements and impact are crucial and critical not only for our fund, but for the entire sector. And then the broad ecosystem support, where, of course, we help to either publish studies or, of course, participate in events like these ones to help broaden the knowledge and bring the relevant expertise and capital to the market. I think that's my last slide. My contacts are there. In any case, if you want to catch up with me either during the silence of these events or beyond, feel free to reach out. Much appreciated.
Thank you, Denis, for this presentation. Now we'll give the floor to Jean-Denis Collin, who is fund manager at Electrify, who is also supporting private sector, and which is also a big partner of the EU. Jean-Denis.
Thank you, Nicolas. Yes, so I'm Jean-Denis Collin, fund manager of Electrify. Electrify has been set up 6 years ago. It's a common initiative of the European DFIs and the European Commission with the purpose to fill a funding gap for projects that are too small or too risky for the DFIs, with a clear focus on off-grid. So we now have 250 million under management, and it is managed by the management company of the 15 European DFIs, which also manages some other initiatives, including Agrify and some guarantee programs. So Electrify, so what we do is that we basically we invest where most of the others cannot. So we do provide patient growth capital, so growth stage capital, mostly equity or quasi-equity. We will provide a bit more details afterwards. The idea is that we provide highly catalytic capital through partnerships with other parties, other investors. That can be DFIs, but also some impact investors, including EGF and others. And we also mostly focused on impact. So a few of our investee companies are mentioned there. As we will see after, we cover quite a broad range of sectors and business activities. So yeah, after presentation of Denis, I think this chart might be familiar to you. But indeed, I think to a certain extent we are trying to fill the same funding gap, focusing on this initial growth phase. So we are not providing seed capital. We are not an incubator, but whether we step in when we believe there is sufficient traction and sufficient visibility on the company's growth. But at a stage where it cannot attract capital from the from other institutions like the DFIs, and also before it can raise more commercial funding. So I think from that perspective, we might be very similar to what EGF does. So eligibility criteria and offering. So we focus on distributed renewable energy. So we do finance all the business models in that space, which includes solar home systems and productive use appliances. We also finance mini grids. We also finance C&I projects, so with commercial and industrial off-takers. And then we also look at small IPPs, the ones that are too small or too risky to be financed by the traditional DFIs and commercial investors, so on-grid projects. And we are also venturing into other business models like decentralized biogas generation, clean cooking, and some other innovative business models, including energy efficiency. Another key eligibility criteria is the commercial viability. So as I said, we are not providing seed capital. So we step in at a stage where the company can evidence some path to profitability under sufficiently reasonable assumptions. ESG standards. So we stick to the most stringent ESG criteria, amongst others the IFC performance standards. So from that perspective, we really follow the state-of-the-art standards and approach. Track record is also a key aspect and a key criteria of our investment strategy. So again, I think it relates to the stage of investment. So we need the companies to evidence that they have a sufficient track record. Offering. So as we said, we are providing catalytic capital for growth stage companies. So we provide investments. So our ticket size is between 1 and 10 million. So, but on average, is around 2.7 million per investment. 2.7 million euro. So and then we cover the full range of financial instruments, as from straight equity to long-term senior debt, and everything in between. So including quasi-equity. And then subordinated debt, junior debt, and also convertible notes. So I think from that perspective, we are quite flexible and also very additional. So the Electrify portfolio. So I think this slide really evidences our success so far. So we were set up 6 years ago. We have now committed just 100 million euros. So we passed the bar a few weeks ago, supporting 36 companies and projects with more than 50 transactions. Because with some of our companies, we are providing several instruments, close to 80% in Sub-Saharan Africa. And very important to mention, more than 60% of our committed capital so far is with equity and quasi-equity, while senior debt is below 20%. So, and the difference between both is about junior debt. So it means that's more than 80% with equity-like instruments, including junior debt. So it shows to what extent we are catalytic and we can leverage others. Also recently we have developed a new financing instrument, which is a working capital facility that is been done with a first investee company called AMPT. We are working with another company to provide the same instrument. I think it's also very additional because I think it's quite uncommon to have such an instrument in the market, and then it can really provide the liquidity mostly for tech-focused companies, where as an investor we can really take the technology risk, but instead of we pre-finance orders under a 6 to 9 months basis with a revolving credit facility, so also very additional. In terms of business activities supported, so about 30% of our portfolio is with SHS companies, but we also finance more and more mini grids and CNI, which together represent about 30% of our portfolio so far. And then we also finance other distributed renewable energy models, including, as I said, like decentralized biogas, productive use appliances. And finally, we also have some other type of transactions, including intermediate investments, as we have invested in 4 different funds. But of course, our focus remains clearly on direct investments. So the previous slide was about how much we have invested so far, but so this more than 100 million committed has quite a significant impact. So thanks to a more than 3 times leverage, we have been able to create more than 2 million connections, meaning about 13 million beneficiaries for a generation capacity of 200 megawatt. As we said, 78% in sub-Saharan Africa, and so resulting in very substantial CO2 avoidance of estimated at about 100,000 tons per year of CO2 avoided. And we also very focused on gender and gender equality, and 86% of our portfolio qualifies for the 2X challenge, which is also a very key aspect of what we do. So that's it for the presentation. So these are our contact details. So we are a team of 7 investment officers plus myself, the fund manager. We also have 3 investment analysts supporting us. And feel free to visit our website and to contact us.
Thank you, Jean-Denis. So now we'll give the floor to Jenny Fletcher, who is CEO of Area Finergy, which is a clean and renewable energy company that provides end-to-end service from design to build, operate, and finance. So integrated service. So please, Jenny. Please try to stick, if possible, to all the panelists to 8 minutes, so that we have time after to take a question from the audience.
Absolutely.
Thank you.
So good morning, everyone. I just wanted to ask a quick question to the audience first, just to get a sense of kind of who we are in this room. So who in this room is actually a financier, like most of the presenters up here? Who are the ones who are here to find people to give money to? Well, there's not many. Can I see the hands? So people who actually like Electrify or EEG or like Get Invest, who will put you together. How many? Can I see that? Just see the hands again. People who are with funds with. Okay, great. And who are the developers who are looking for money? Okay, that's a lot of us. I mean, that's great, right? That's why we're here. We're here to meet the funders. So Area Finergy is we're the power partner of our clients. We have 40-odd systems, 14 megawatts, and we work primarily in Kenya, Tanzania, Uganda, going into the DRC. The market is huge. I mean, this year we've actually applied, I think, to get Invest for. We're working on a 5 megawatt project in Tanzania. We have looked at Electrify. We weren't big enough. We are raising money. So our financing side, we do raise money. I'll get to that. Thank you. So our core business, as said before, is the design, engineering, procurement, and construction of clean and renewable energy assets. We do solar PV, solar thermal. The first large-scale industrial solar thermal went live in Nairobi, in this region, went live in Nairobi just a few months ago, providing heat, a very underrepresented form of power. You know, heat is 80% or 75 to 80% of the cost as opposed to electricity, and yet there's very few solutions that actually speak to heat. We provide many batteries, and we do a lot of off-grid work. I think really a big thing for the future is power stabilization. And for that, we have created the Vision Controller, which has 3 main parts. And one is the mango, which is, you know, the mango tree is the tree when you go out to villages that you sit under and you have conversations with the villagers to figure out how to do things. So that's what the Mango Vision Controller does. It's very much focused on communities and bringing power into unstable environments. So wherever you have unstable power, that's where we come into our own. And then on the financing side, I mean, cash is king, right? Is there anyone who disagrees? Cash is king. Without cash, you go nowhere. So we've actually, and this is probably why I'm on this panel, is we've had to raise our own money as we've grown. The company started in 2016, and actually getting money from any of my fellow panelists was impossible. We weren't big enough. So we had to raise our own financing. And let me go on to the next slide. We had to raise our own financing in order to be able to actually build projects. The clients that we have want anything from 5, 10, 15-year projects. We usually have monthly payments. And then a lot of we have the installment sale as well, which is a shorter 2-year, and we have power purchase agreement. So we have the lease, the installment sale, and the power purchase agreement. But if you're dealing with off-grid or you're dealing with productive use, commercial and industrial, each customer maybe needs $50,000, $100,000, maybe $600,000. But there's not many funds that will provide funding for less than $1 million, more like 5 million. It's just not that interesting. So we had to go out and find, and mainly through crowdfunding, to find ways to aggregate projects. So I guess you could say we're an aggregator, and then what's being said on this panel is then really interesting, because that will allow us to jump to the next level. How many in the room are sort of in this position where you're in the middle, you're looking for smaller financing, and you need to take the leap to the next? Yeah, so there's quite a few of us in the room in that position. So there are ways to get the financing to do these kind of projects, which allow you to aggregate, which will then allow you to go the next step. So some of the systems that we've financed under this kind of model is Highland Drinks. It's in Nyeri in Kenya. It's a 15-year PPA, 365 kilowatt peak. So that's sort of sitting in the middle of the size of projects we do. The Margin Par is 5-year leases. Flower Farm, that's actually a group of 6 different farms. So various ground mounts, roof mounts. In each one was like $40,000, $50,000. So we, in order to grow, certainly in Africa, getting the money from the banks is very difficult. So we have to be extremely innovative about how we raise money to actually be able to do the projects like this. Now we have 40 of them. We're big enough that the big guys are interested. But it takes a lot to get there. So happy to talk to anyone about our journey, how we've gone through. And then, of course, I'm going to be chasing all these guys. We have a project, this 5 megawatt in Tanzania, that's in the Get Invest books. They haven't approved us yet because we only just submitted it. Yeah, anyone who's sort of in similar stages to me, happy to have a talk and talk about the different journey that we've followed to start raising funds. I mean, we've looked at Electrify. We've always been too small. We're maybe getting to the size where now they'd be interested in us, maybe with EEG and maybe with you guys as well. So it's a journey, but cash is king. So here's to all of those who have cash to help all those, seeing as the majority of us are developers or EPCs in this room. It's a great place to be. Thank you.
Thank you very much, Jenny, for this sharing with us this very interesting experience of a private entrepreneur and this journey to move on and to develop your business. So now I'm going to listen to Tariq Ahmed, who is a program officer and project facilitation and support manager as well at ARENA, which is an intergovernmental organization that's well known, I think. So I will give you the floor. Thank you.
Thank you very much. I'm really pleased to be here and to present about what IRENA is doing. So just maybe briefly, IRENA is the International Renewable Energy Agency, and it is intergovernmental organization mandated to support its member countries in the development of renewable energy and the clean energy transition pathways. So let me start with the before I start, let me say that we don't have the money. We don't have the cash, but we are trying to be the gate to the potential developers or project developers to get the money. We help in mobilizing the funds. So IRENA has many knowledge-based products that already and reports. And let me just take a reference to the World Energy Transition Outlook that is published in 2021, which IRENA analyzed the current pace of development, analyzed the current plans, and compared it by the net zero target by 2050, and with the current pace of development and plans that already announced by governments, we will fall short of achieving the net zero target. Looking at the level of investments currently, in the plans of the different governments, we found that this will miss the target by 33 trillion US dollars. That means that every year from now on, we'll need to kind of mobilize additional $1.1 trillion in addition to the current pace of development. At IRENA, we have more focus as presented earlier, that where the gaps is. Sub-Saharan Africa is kind of energy access is one of the biggest challenges in sub-Saharan Africa. Looking at developing countries, the developers, they face multiple challenges, including the high initial investment costs, but also the technical capacities and also the knowledge about if you have a project, where to go with, where to find the finance, how to develop your documents in a way that it also talks to the requirement of the financial institutions. So in that sense, we try to kind of design a tailored solution to facilitate this and to help the project proponents to prepare their documentation and also to kind of give access to leverage that IRENA and its partnership with hundreds of financiers could bring to the table. So we, in 2020, IRENA established a new division, which is the Project Facilitation and Support Division. So this division is playing the facilitator role in mobilizing capital to achieve the NDC targets. So the Project Facilitation and Support Division has two main flagship initiatives. The first one, and the one that I will be speaking about, is the Climate Investment Platform, which is an initiative that is announced in 2019 in partnership with UNDP, SE for All, and Green Climate Fund. The second initiative that hosted in the Project Facilitation and Support Division is the Energy Transition Accelerator Financing Platform, in short, ETAF platform, which is also announced in 2021 in COP26 in Glasgow. And the formulation of this partnership with UAE and Abu Dhabi Fund for Development is going on, and we are bringing additional financiers to the table. So how we do our work in general is that we provide tailored technical assistance to support projects in one hand, and then we establish a lot of partnerships with key players, international, regional, and also at local level. And we also, in order to help them, we do matchmaking between the two ends, and we do that bilaterally as well as through regional investment forums that we are doing. This is a snapshot of our current progress. So to date, we have received more than 330 projects. They submitted their requests for our support. We found around 150 of them are eligible for our support. I will explain in the coming slides our eligibility criteria as well. And on the other hand, we have around 340 partners, and we have out of them more than 80 financial institutions. Here I wanted to highlight also that the Climate Investment Platform is a platform not only for access to finance, but also for technical assistance, for other risk mitigation facilities, and so on. So we're trying to kind of find the missing gap in the project and then to kind of link them with exact partners that can help them to advance their project forward. To date, we have supported around 42 projects. And 9 of them matched with financiers already and attracted interest of financiers. So in total, this results in total capital mobilization of 1.2 billion US dollars and more than 500 megawatts of installed capacity, and that will translate in 5 million tons of CO2 emission reduction. This is just a map to show the geographical distribution of our support. In the blue circles are the requests coming to us, and the yellow circles are the projects that we've supported. You could see from the map that more than 80% of the projects supported in sub-Saharan Africa, which also aligns with the earlier map that presented that here is a gap. And more than 60% of the projects that requested our support are distributed renewable energy projects. So it's two ends of equation. We have projects one hand, we have partners in the other hand. Our eligibility criteria is that the project needs to contribute to the clean energy transition and needs to be aligned, at least not in conflict with any of the sustainable development goals, and needs to be consistent and aligned with the national climate priorities. And the last and most important also is that it needs to be beyond conceptual stage. We need to see that the project proponents already did some effort in their preparation, prepared at least pre-feasibility study or preliminary studies. On the other hand, the financiers that they are registered in our platform, they provide different type of finance, including debt, mezzanine, grant, and others. So this is how you could get in touch with us. We have our website, irena.org /IRENA for CIP, where you can register, like if a financial institution or technical assistance providers could register and become a partner with us, and if a project proponents require our technical assistance and matchmaking support, also could register their projects, and I also put some emails here for easy reference, and thank you very much.
Thank you, Tariq. So I will now give the floor to Amitesh Sinha, who is partner at CIMA Funds, and who is a fund manager on the impact sector. Please, Amitesh.
Thanks, Nicholas. So CIMA is a double bottom line impact investor. And we are also an advisor. So the name, the full form of CIMA is Social Investment Manager and Advisors. So our belief is beyond funding, we try to support the companies in whichever way we can. The whole genesis, if we go back to how CIMA was formed, the two founders, which is Asad Mahmood and Michael Ronhorst, they worked for Deutsche Bank for about 22 years. And then they realized that a fund manager with a lot of agility and a lot of flexibility needs to come in the market. And I do have a very good understanding of what Jenny is saying, because I was on the operator side 4 years back, so I completely resonate with what she said and many of you here. So going to what CIMA does impact, and this is our journey through 2016 of where we are closer to 200 million US dollars in AUM. We have grown from 5 employee strength to about 51 as of today. And we have 3 funds live as of today. And we were one of the, the largest private sector players in the pay-as-you-go space. So the fund one, which typically invests into pay-as-you-go company and financial inclusion who are supporting solar projects. That fund is about 90 million and it's live. The second fund, which is the distributor financing fund, it's a bit of an innovative fund, was in partnership one of the software providers called Angaza, and it is a data-driven fund where we are trying to analyze data which is being collected and automated through the Angaza platform, and we are able to underwrite these loans in a much more automated and a faster way. So that's the idea of this fund. We did a pilot, and now it's going into a larger fundraise. And this is for the people who are on Angaza platform. They can apply with us because we have an additional mandate to invest through this vehicle. Now, one of the most important fund which is live and would be of interest for many of the operators present here is the Energy Access Relief Fund. This relief fund is basically was set up to help the off-grid companies, not only off-grid companies, but all the energy access companies who had, liquidity issues or other issues during this whole pandemic. And the genesis of the fund is to support those kind of companies, provide them with flexible capital, provide them with concessional capital, which becomes a catalyst for in terms of recovering through the pandemic. As you can see, most of the the loans which is anticipated to deploy is going to be in sub-Saharan Africa, and with various sectors where, and this is very open when it comes to energy access, be it off-grid, be it pay-as-you-go, mini-grids, productive use. We are very much open for any kind of a project in the energy access space. So that's something where we are trying to be flexible. And I think one of the key elements for EARTH and CIMA has been that we have been very agile. I will, if I tell you that we have closed one of the loans in just 7 days, I'm not sure if that is kind of heard in this particular sector, but we have done that. And just to talk some more numbers, ever since this fund was launched in September 1st last year, in 2021, and we are June, so roughly about in 9 months, we have underwritten close to 60 companies. So you can imagine 60 companies in 9 months, roughly doing about 5 to 6 companies a month, with a team size which is dedicated to EARTH is about 20 people. Those are some numbers which we are very proud of, and we are very proud of seeing how this money is actually helping some of the operators in terms of their scale up. So that has been our journey in the EARTH. And I'm happy to tell that we still have about 35 to 40 million, and the total size of this EARTH fund is about 90. So we still have about 35 to 40 million where we plan to deploy in the energy projects in Sub-Saharan Africa and Southeast Asia. So if you are, so these are some of the very high-level terms of how the EARTH works. It's very flexible when it comes to commercials. It's very flexible when it comes to collaterals. We have seen, how companies have struggled, specifically in the pay-as-you-go space, where they're not able to convince local banks in terms of getting, receivable collateralized with them. So this is very flexible, both on the commercials, both on the tenor side. We have a moratorium over for 18 months, very flexible on the pricing as well. I think up to 5%, but in general, the pricing range has been about 3.5 to 4.5 kind of a range in US dollar. And we do have a facility to convert this into local currency through our hedge service providers. And again, reiterating that we are very agile. The moment we have the eligibility criteria met, we try to close the deal within 5 to 7 weeks, which and sometimes even sooner is what we try to achieve. Now, these are some of the eligibility criteria where a company can apply for this. And there are some 2 criteria when it comes to, large companies and smaller companies. So this is the initial criteria where you can see that, it talks about your revenues, it talks about your experience, it talks about your, total equity. So we are flexible around with some of the smaller companies. As you can see that we have made it a little flexible for the smaller companies. Once you qualify through this round, then you are required to go through the whole due diligence process. Okay, sorry about that. So these are some of the secondary criteria. The moment you are able to meet these, which is a little advanced than the primary criteria, if you're able to meet this, you move into a due diligence phase. And now it depends upon the companies as to how soon they can provide and support the due diligence. Then we are able to close it in 5 to 7 weeks, and we try to expedite as much as we can. And this is the link where you can apply the loan. I can share more information if you want me. If you want to write to me, it's Amitesh at CIMA Funds, AMITESH @SIMAFUNDS.com. You can write to me. I'll connect you with the right set of people. Now, on top of these funds, we are also supporting some of the SME clients in terms of getting them investment ready, helping them with their fundraise, grant raise. We have successfully raised closer to about 10 million in grants so far, where we have started this advisory. And SEMA is soon coming with commercial and industrial fund designed for SMEs, where we will fund a longer tenure, 7 to 10 years, and we are planning to do that with a small and mid-sized project ranging from 500 kilowatts all the way up to 5 megawatts. So that's coming. So please, you can keep a watch on our website. Yeah, and I'm happy to connect with anyone who is interested in knowing more about ERP and plans to apply. And before I sign off, I'd definitely like to thank David and his team for organizing such a beautiful event. It's been a pleasure meeting relevant people, and I hope to meet more of you guys in the next coming days. Thank you so much.
Thank you, Amitesh. So now we have 10, 15 minutes for questions from the audience. So please, if you have any questions, maybe. So please introduce yourself and indicate to whom you would like to ask the question. Thank you.
Hello. Thank you for this opportunity. My name is Christina John Omodo. I'm a director of a wind project development company that is called Udo Limited. It's a startup that was registered this year. It's a woman-led enterprise. So together with project development for mini grids, we have also, we're in the process to implement clean cooking with biodigesters. So my question goes to Dennis Onyango, the investment manager of Triple Jump, and it's about the Energy Entrepreneurs Growth Fund that I would like him to advise me or to say when are the announcements for the call of applications for capital venture, because we are still at the startup stage and we need to break through so that we can proceed to the projects. And also later, we're going to perform some pre-feasibility study, meaning wind measurement studies, etc. So I would like you to advise us on when are you announcing the call for applications, and or if you can share a link, perhaps, it will be a great opportunity for us. Thank you so much.
Thank you.
Hello. I didn't quite catch your name, but we typically don't do calls for applications. What we do is, of course, you can reach out to me through the email address. And of course, we can walk through your business model, try to figure out whether it's at the stage where our capital is most optimal for your organization. In the event that that's not possible, of course, I tend to introduce you to other players who might be well suited for your business. But in this case, I think, yeah, we can have an offline conversation just to get to narrow down on what your true capital needs are and whether EGF in this case might be the best suited to provide that.
Thank you. More questions?
Thank you. My name is Prosper Magali, the chairperson for Tanzania Renewable Energy Association. So ticket size is always a challenge for small projects. And it's really encouraging to see or to learn from them what they've been able to maneuver to solve that challenge. So my first question is actually to Dennis. Jen Dennis and Amitesh. Can we as an association aggregate projects within the umbrella of the association and apply for funding to your organizations? That's something which you could consider. And the second question is to Sebastian and Tariq. Can you, from your technical assistance facilities, can you help us as an association to maneuver on bundling this kind of projects so that we can qualify to apply for funding? Thank you.
Thank you. So maybe Jean-Denis to start.
Yeah. Thank you for the question. I think first about ticket size, what I would like to clarify is that it's mostly about our limit and our average ticket size, which is at around 2.7 million euro. It's mostly about resources. So we have more than 250 million to manage. So unfortunately we have to do transactions that are of a minimum size to keep it manageable. And even with an average ticket size of 2.5 million, it's already a lot of transactions to manage and to monitor. So it's not just like a kind of a discretionary minimum size, but it's really for us to keep it manageable from a fund management perspective. So I think from one side we can say that it's high, but we have also discussed with some parties who said, but it's way too small. We don't need country windows that are country specific, but we need doors because what you are providing is way too small. So some believe it's too small, some believe it's too high. So it's not always easy to find the right place. But so I think that's what I wanted to clarify. Indeed, I think what really is needed is about aggregation, and I think the same would apply for CNI project, and we are financing a few CNI players, and we have been able to do so because they aggregate the project in a in a separate platform or in a separate asset co, or there might be several different structures that we could consider, but that really provides some scale and some sufficient size for us to be able to finance it. Of course, if you come to us and with a 100 kilowatt mini grid project or a 200 kilowatt CNI PV project, indeed it's too small. But if together we are able to set up a kind of platform or asset co which is scalable, which with some existing track record, but with the potential to grow up to a few, I don't know, a few hundred kilowatts in case of mini grids, a few megawatts in case of CNI project, it is totally within our mandate and something that we can consider. Of course, it would require some work, some transaction works, because of structuring this kind of platform can take time. I think that is also something where Get Invest can assist, I guess. But that's definitely something we need to we have to consider really to reach the minimum size and also to be sufficiently scalable.
Thank you. Maybe Amitesh, you want to?
Yeah. So Prosper, I think Jean answered on how aggregation can happen at sea. I've not heard of that an association can aggregate projects. But if there is a developer who has multiple projects under CNI, we have seen that getting aggregated. But I think to solve that problem, at least we have two funds, as I said, the DFF and the EARTH, which are the ticket size could range from as low as 100,000 and can go up to 2.5 with an average ticket size of close to $500,000. That could solve some of the problems of the smaller companies. And I've heard this a lot in the room and during yesterday and today, that this ticket size for the smaller companies and the smaller projects is an issue. So we hear that, and when we do our modeling, we will try to keep, if we can carve out some number to cater these smaller projects. We do think about it, but as John said, that it's a little difficult to manage too many companies at one point of time. But we try to do as much as we can, and some of the relief funds like the EARTH and the DFF, the innovative funds we have, we are able to cater that market and that segment where companies need smaller amounts.
Okay, be mindful of time. I think we have time for maybe one or maybe two questions. I don't know if anyone would like to. Yes. Okay, there is someone in the gentleman here.
Yeah, good morning, everyone. I'm Livens Manyanga, and I'm from the NGO. And looking at what I've heard from the presentation, my question goes across that I could not really see that what is the roles of the NGO or government institutions in facilitating the objectives that you have. I didn't get it clear whether it's something that is possible to make it happen, and how best that we can collaborate. Thank you.
Thank you. Anyone would like to take this one? Question?
I'm using the opportunity to answer for these questions, also the two previous before. Prosper, we can talk. It's part of our mandate to support associations at GetInvest, so let's discuss later. Also to the lady, the question before, I think we should also talk. GetInvest can help you to better understand all the different opportunities on the financing side, so you don't have to talk to each individual financier. To the last question, of course, we cannot be successful without support of a regulatory environment, and this is the government and this is the NGOs. We have a sister program which is called Get Transform. It's part of the Get Pro global program, and Get Transform is doing exactly this. They work with governments and regulators on actually setting the framework. So from our perspective, GetInvest supporting the private sector and making things happen in distributed renewable energy in the private sector can only work in a conducive environment, in a regulatory framework which is actually supportive for this. Yeah. So we also work with this in a sister program. So this is the role government has to play, among others, similar to NGOs. I think NGOs, it really depends on what sort of area the NGO is working on, but we also support NGOs in some cases when it comes to the business side, but I think NGOs also play a strong role when it comes to things like environmental, social governance, ensuring also the gender empowerment and these kind of things. And we are looking into this more closer now because they have a role to play as well.
Thank you very much. So we'll have that will be the last question. And of course, you'll have the opportunity to interact with each of the panelists during the coffee break that will come right after the session. So that's the last question. Thank you.
Okay. Merci. Je suis André Noël Béré du Burkina Faso, de la société Africa Énergie Solaire. Et j'ai une question particulièrement à poser à Monsieur Chincha qui... Donc, je reprends, je suis André Noël Béré de la société Africa Énergie Solaire, une PME du Burkina Faso dans le domaine des énergies renouvelables. Et j'ai écouté attentivement l'explication de M. Chicha par rapport au financement des PME et la célérité dans laquelle ils accélèrent pour le financement. Donc, moi, j'ai une question à savoir, est-ce que vous aviez un partenaire en Afrique subsaharienne pour faciliter cela, où tout se passe à partir de votre point focal? C'est juste une question pour pouvoir aller plus vite, car nous sommes autour de 50 PME burkinabés qui sont là, et votre explication nous convainc beaucoup et nous permettra de vous approcher le plus rapidement possible. Merci.
Merci beaucoup. Amitesh?
Yeah, no, we have a team in Africa. We have an extensive team in Nairobi. We have people in Uganda. Unfortunately, as of today, we don't have anybody in Burkina Faso, but we have a good amount of presence in East Africa who can support your project. So maybe I'll exchange my contact details with you and you can write to us, and we will be able to provide support. So we have people in East Africa, we have people in Botswana, Zimbabwe, and now growing our team in Nigeria for catering the West African market. So And most of our analysts and AVPs are based in the emerging markets, including India, Pakistan, and Sub-Saharan Africa, where our projects are. So it's quite diversified in terms of location. We try to be on the ground to support, the companies. So yes, we are kind of present remotely everywhere, and I can share my contact if you want to explore more.
Well, thank you very much. So that will be the end of this session. I would like to thank again all the panelists for their contribution and while sharing their expertise and experience with us. Of course, you'll have the opportunity, as I said, to interact with them during the coffee break and later during the day, if you want. You have the contact address of each of them that was shared during the PowerPoint presentation. So please contact them if you have any question. So thank you very much, and well, see you at the coffee break then. Thank you.
Hi everyone, I just want to let you know also that we have a bit of a delay in the program, so the next session on Burundi will start at 11:45 until the lunch break at 1. So have a good